Good morning, I'm Larry Steinhouse, and welcome to Money Chat Now. Money Chat Now is a politically charged stock market pre-show giving you the politics of the day and the biggest moves in the stock market. It is presented with comedic common sense by an expert in financial literacy, and hey, that's me, Larry Steinhouse. Today is, do I have the right date in here? Yeah, it is. It's Wednesday, June 16th. It doesn't feel like a Wednesday, does it? All right, I want to welcome you to the show. We are here live on WWDB Radio 860 AM in Philadelphia, and we are live on Facebook, Twitter, LinkedIn, and YouTube. You know why doesn't feel like Wednesday? Because it's actually Thursday. All right, you can find me on Facebook, LinkedIn, Twitter, Truth Social, TikTok, and other social media by searching Larry Steinhouse. Hey, just a reminder, if you're watching online, hit that share button, hit that like button, and don't forget to subscribe to the YouTube channel. Hey, also like the Money Chat Now page on Facebook, and of course you could comment live during the show on YouTube, Facebook, LinkedIn, and Twitter, and please say hi so I know you're watching. I hear a lot of people are watching for the first time, so if you're watching for the first time, please say hi, because I'd like to know that you're watching, and I'll say hi back. By the way, if you're commenting from a group and it's not the Money Chat Now fan page, your name may not show up on my dashboard. So please go to the Money Chat Now page and comment there so I can recognize you. Money Chat Now is brought to you by Investor Schooling, and you can attend a complimentary class today, because today is Thursday, by going to Investor Schooling. You'll learn about real estate investing and stock options trading from those who do it every day. Hey, real quick, I want to say hello to a couple of people online. We got Glenn and Brandon and Mark and Tom and Ken and Mick and Rob. Thanks so much. I totally appreciate you guys watching. And if anybody else is out there, just say hi so I know you're watching. All right. On today's show, of course, we're going to be talking about the futures update. I got a little segment on Shut Up, Biden. And then we're going to talk a little bit about the 3/4 point increase by the Fed and what that means. What it means to you. Obviously, we're going to get into that a little bit on the recap, but I want to talk about that at the end of the show, what it really means to you. All right, so yesterday, it happened. Fed Chairman Jerome Powell did the unexpected, or actually, was it really unexpected? And he raised interest rates 75 basis points. This was a surprise, but not a surprise. Okay, I know you're confused, so let me explain why it was a surprise and not a surprise, and also why the market actually reacted positive to the surprise, but not surprise, interest rate of 0.75% of a point. All right, to start with, the surprise, or at least to me, was because Powell in the last meeting said that 3/4 points increase rate was off the table. He literally said that, but then he announced a 0.75% interest rate raise. If you remember last month when Powell said the 0.75% was off the table, the market reacted very positive to that. The weird part was that the market has been reacting very negative to inflation the past few weeks. So the CPI data was released last Friday, and that made the market, of course, nervous because inflation went up a bit. Instead of moving down as they expected, the Fed had to look at the data and think, damn, this small increase isn't working, so let's go to a bigger increase. Some even suggested a full 1% increase. I wouldn't be surprised if Powell didn't make the declaration of 75 basis points being off the table, and if he didn't make that declaration, I wouldn't be surprised if they would have actually gone to 100 basis points. So here's why the market reacted positively to the announcement. The market is probably actually just plain sick of inflation at this point. It may just be that they're sick of the reporting of inflation more than the actual effect of inflation numbers. However, either way, they're just sick of inflation at this point. So the market, while listening to Powell's speech and the questions after the speech, was convinced that the Fed will do anything they have to do to lower inflation. Now, I watched the speech, and I don't know if you guys watched it, but I like to watch it, and like I said before, I like to watch it. I leave the Dow ticker next to it just to see what happens whenever they ask questions. So, and by the way, it's a lot of fun to do, actually, right? Anyway, at one point that surprised me was when a reporter asked Powell if he felt the unemployment rate had to go up to stop inflation. Interesting question, right? He gave a roundabout answer and reiterated that they will do anything to stop inflation. Basically, he agreed that unemployment must go up to stop inflation. Oh boy. I yelled at the screen and I said, shut up to the reporter. But the Dow surprisingly rose when he said that. So Wall Street is just as sick of inflation and they want it stopped. And that's why the market increased each time Powell suggested that the increases will continue until the bad boy named inflation is tamed. Look, the Dow actually rose to my hopeful point of 31,000, but it just didn't hit it. It was shy a few points and closed up only 303 points up. And I got to tell you, 31,000, if because it didn't hit the 31,000, I'm going to tell you that I believe 33,000 is now off the table. Hopefully I'm Powell and we'll hit it again. We will probably see 32,000 again, but that may be just for a second. But I don't really think that 33,000 is going to happen. I think we're going to start ratcheting down into the 28,000 range, which is what I've been saying for quite a while, and we'll get there by the end of the year. The highs will keep getting lower, and the Nasdaq, by the way, yesterday also had a nice bounce when it closed 270 points up. Unfortunately, all this changed as investors took the time overnight to think about the reality of raising interest rates, and also some other banks reported that they were raising interest rates as well overnight. When I went to bed last night, I checked the futures, and frankly, I was surprised to see that they were actually up. But this morning, I checked it again, and no surprise, they're tanking. I think it was down 500-something points at one point. It might even be there again. We'll see in a minute. And look, it's not uncommon. I've noticed that when the Fed speaks, the market initially gains and then drops as the reality kicks in. I got to tell you, it's going to be brutal. The concept of recession is still, of course, on investors' minds, and it probably will continue to dampen the market outlook. By the way, a recession is classified as a downturn in CPI or negative inflation for 2 consecutive quarters in a row. The question will be is if they overshoot the adjustments and put us into a recession. I personally believe it's going to happen. However, the real 2008 comparison won't happen for about 12 to 18 months. And I'm also predicting 2 recessions, and the second one will be the devastating one to the economy. By the way, the big winner yesterday was Boeing when the stock jumped 11.5 points to 133.72. Netflix also did well and increased 7.5% for the day. Netflix is finally in a price I can consider, but I'm still watching it before I take the leap. I can't avoid looking at it any longer. So, by the way, let's look at the futures now. And by the way, also keep in mind that we're heading into the other side of the dead zone, and earnings season is starting in 2 weeks, so we might have some relief from this. All right, right now, the Dow is down 524 points. The S&P is down 80, and the Nasdaq is down 295. All right, before I get into Biden, real quick, I want to say hello to a couple people just joined us. We got Peter and Deb and Moshe and Charles. Thanks so much, guys. I totally appreciate it. All right, let's talk about Biden. So I have a theory about gas price increases and why gas prices just keep going up, and it isn't all the obvious reasons. Look, it makes sense that the war in Ukraine has a partial effect on gas prices. Sanctions against Russia will also have an obvious impact, but these are small things compared to the reality of the increasing gas prices. As a comparison, oil peaked at $143 a barrel in 2008, and gas prices were about $4 on average. If we were about $115 a barrel, then why are we over $5 a gallon for gas currently? Look, of course you can add in the economic factors of getting that gas to our tanks, such as the transportation costs, including the driver's salary, to transport the gas to the fueling station, right? The people manning the station also have had their pay increased, and the cost of electric, the cost of maintenance, you get the picture. But inflation is at 8.9% year over year. Why are we almost at a 100% increase in fuel prices over the past 2 years? Well, what possibly could have changed in the past 2 years? Well, you can stop screaming at the screen or the radio. I know, it was the brain-dead president that was appointed by the 2,000 mules. I was getting to that. But there are obvious reasons for the increase in price caused by this dullard, and then something I've concluded is also a major reason as well. Let's start with the obvious. I want to go through some headlines that I went through. So first of all, headline, New York Times, Biden administration cancels drilling sales in Alaska and Gulf of Mexico. This was dated May 12, 2022. Headline, Biden halts oil gas leases as gas prices skyrocket at home. Dated February 24th, 2022. In an article by the Center of Biological Diversity, by the way, what the heck is biological diversity? Is white oil and black oil treated differently? Anyway, the article states, and this is the headline of the article, Biden administration announces decommissioning of oil rigs off of California, dated July 22nd, 2021. Headline news, CNBC, markets. Keystone Pipeline officially canceled after Biden revokes key permit dated June 9th, 2021. Look, I can go on and on and on, but I think you get the point. And normal people in the country, anyone with common sense, unlike Democrats, of course, believe that these actions and many others that are not listed here are slowing down production of oil in this country. Of course, that's a major part of why gas prices are going up. But here's one you probably haven't thought of yet. It's a simple one. It's this: Biden has pissed off too many people in the oil industry. He has declared them the enemy. Listen to what he wrote in a letter to oil companies this week. At a time of war, historically high refinery profit margins being passed directly onto American families are not acceptable. The president said this in a letter to oil companies, including ExxonMobil and Chevron. Companies must take immediate actions to increase the supply of gasoline, diesel, and other refined product. He put that also in the letter. He pointed to the unprecedented disconnect between the price of oil and the price of gas. Look, since the beginning of the year, refiners' margins for refining gasoline and diesel have tripled, right? And they're currently at their highest levels ever recorded, he wrote, right? Well, Biden, you have pissed off the oil companies by blaming your incompetence on them. You pissed off oil companies by telling them that you pissed them off when you went back on your promise to allow the Keystone Pipeline to continue. You pissed off the oil companies by going back on your promise to continue fracking, and now you're rubbing it in your face. Let me tell you something, you moron. Several people in the United States stopped yesterday. They put out their hand to the ear and said, "Hey, did you hear that? Did you hear that laughing? I think I heard laughing." Yes, the entire country heard the laughter of the oil companies from their collective boardrooms while the CEOs of these companies read your remarks. We all want you out of office, and we all have a vote. That's if it's really counted. But the oil companies have pressure to raise gas prices until you're overthrown. Expect gas prices to increase until the November elections, and watch for a quick drop in price. That is, of course, only if the Republicans are smart enough to vote out the incompetent Democrats. Now today, when you fill up your tank, by the way, everybody listening, if you fill up your tank for over $100, just smile and say, "Hey, Biden, your days are numbered as president." All right, let's take a break here. Pay attention to this commercial, and you can learn how you can take advantage of the upcoming market downturn and learn how you can get tenants to pay for your gas increases like I do. When we come back, I'll be discussing how the 3/4 point increase will affect you, and I will see you guys in a minute.
Okay, so you thought about buying and selling real estate. You've thought about investing in the stock market, but don't know where to start. Well, what if you could find a place to unlock strategies to master both real estate and the stock market, all without the headache? That place is Investor Schooling, hosted by Larry Steinhouse, an expert in real estate, financial literacy, and the ins and outs of the stock market. You can attend Investor Schooling in person or online 8 times a month. You can and will learn how to make money in real estate, and you will learn mastery of stock techniques such as options and covered calls. You will even get a chance to ask one of your burning questions to the stock option sultan, the master of picks and plays. Call 866-424-2829 for free information and receive a complimentary pass to attend classes, or register online at investorschooling.com. Don't delay. These passes are limited. So what are you waiting for? Call 866-424-2829. That's 866-424-2829. Or visit investorschooling.com. That's investorschooling.com.
All right, welcome back to Money Chat Now. I'm your host, Larry Steinhouse. And of course, if you'd like more information on Investor Schooling, you can go to investorschooling.com or call 866-424-2829, 866-424-2829. Hey, I want to thank everybody for listening on WWDB Radio 860 AM in Philadelphia. And if you're watching online, please hit that share button. Come on, everybody. Hit that share button. Hit that share button. All right. Also, by the way, you can share it in groups and you can share it on your own page. Also, hit that like button. Everybody hit that like button right now. I love it when I see those like buttons the likes go up. It's kind of cool. It kind of makes, it's like applause, all right? All right, you can also leave comments on Facebook, Twitter, LinkedIn, and YouTube. And of course, I'll try to respond to them live. All right, so far, of course, we've been discussing the futures. And right now, the futures are down 590 points. The S&P is down 89. And It looks like the NASDAQ is down 323. Oh boy, oh boy, oh boy. It's not good. All right, we talked about the fact that Biden is pissing off the oil companies, and that's what's going on. That's why the prices are so high. Vote this guy out. Get rid of him. All right. We also have coming up, we have how the interest rate is going to affect us. And, of course, we have today's picks and plays. But did you guys hit that like button yet? Did you hit that share button? Don't forget to leave comments on Facebook, LinkedIn, and YouTube. And if you're listening on WWDB Radio, be sure and set a preset to this station and listen every day at 7:30. Also, look up Money Chat Now on Facebook when you get home and let me know what you think of the show. And before we start the second half, hey, did you guys order my new book? Come on, go to wherever fine books are sold. Order Money Hacks by Larry Steinhouse. And you can get it on Kindle or Nook right now. And you can get the physical book, and you'll have that in about 4 weeks. All right, let's get into the second half and talk about this 3/4 point increase. All right, yesterday, the Federal Reserve Chairman Powell stated that the interest rate change to banks will be increasing another 3/4 percentage point. This was the highest increase in interest rates since 1994. Some even thought that it wasn't enough and rates should have been a full point. So what does it mean to you as a consumer? All right, so first of all, you should know that the Fed isn't doing it to punish Americans. After all, well, maybe he is a Democrat, maybe he is. Well, nah, it's not. All right, he's doing this as an attempt to stop inflation from getting any more out of control. Look, inflation is due to all the ridiculousnesses of the scamdemic, such as supply chain issues, housing pent-up demand, and the free flow of money during that time that got out of control. In my opinion, and something I've been saying for 8 years, is that the Fed needed to raise their rates when Obama was president. Obama and Trump, they should have been raising interest rates. Even Trump called on Powell to raise rates a few times, and it never happened. Many Americans have now gotten used to low rates and don't remember my generation rates of mortgage rates of 13, 14, and 15% to buy a house. Well, the younger generation is about to get a rude awakening. Look, first let me explain how the interest rate increase actually affects banks. So banks borrow money from the Federal Reserve and then use that money to lend it to you. So a 75 basis point increase means that the bank will now borrow money from the Federal Reserve for 0.75% more than they did last month. You should know that the Federal Reserve was lending banks money at 0% during the scandemic and continues to do so up until March this year. By the way, with all the current increases we've had so far, the rate is now 1.75%. So the rate that the Fed is lending to the banks is 1.75% as of today. In 2019, before the scamdemic, the rate was 2.5% at its peak. And in 1980, it was 20%. So, really, what's the big deal? We aren't anywhere even near the rate of 2019 yet, and the economy is kind of still on fire, well, at least for now. The biggest place you'll be affected in the amount of money you'll pay to borrow will be to pay to borrow money. This typically means your interest rate for mortgages, car loans, and credit cards will be higher. Look, just to be clear, if the Fed is charging banks 3%, and not even charging banks 3% yet, but if they're charging 3%, and they probably will by the end of the year, by the way, that doesn't mean your rate will go up by that amount that the Fed increased the rate. Banks can set their own loan terms and how they feel would make the most sense. So if the Fed rate is 3% and the bank adds 3% to that, it's very simple. Simple math, you'd understand that your rate would be 6%. However, some banks may choose to increase a different higher or lower rate. One bank may say that they'll charge 2.5% over the Fed rate, and another may say that they'll charge 4% over the Fed rate. There is also something called the prime rate. So the prime rate is an average rate that banks charge their best customers. Look, I've had loans that are calculated at 50 basis points below the prime rate. For example, if the prime rate was 4%, my interest rate would be 3.5%. The reality is kind of always shop around for a rate, that's fine, but to me, access for money is more important than rate at any time. I often tell my followers to get as many lines of credit as possible and use those lines of credit to make money on that borrowed money. By the way, the concept of raising interest rates to lower inflation has a lot to do with house prices. With mortgage rates rising from what was about 3% in December to a little over 6, actually I think it's almost 7 now, it changes the dynamic of how much someone can afford to budget for a house. If housing slows down, housing prices go down and inflation starts to drop. Of course, sales of cars and other items, like you may use credit for, are also going to drop because of the same calculation. So here's the head scratcher now. So think about this. Isn't raising interest rates just another form of inflation? Maybe the price of goods goes down, but the actual cost is the same or even goes up if you borrow money to buy the item. Well, maybe Dave Ramsey is right when he says buy everything cash. Yeah, I still won't do that. But I like to buy investment properties, and I like to also buy them with credit. The reason is I think it's just too heavy to carry all that cash to go to a closing. Bottom line, look, don't panic. It's only 1.75%. No big deal. All right, let's take a break here, and you can learn about how to live through the upcoming recession by watching this commercial. Hi, I'm Larry Steinhouse, and I've written a book called Money Hacks. The subtitle to this book is because everything you think you know about money is wrong, and I promise you there are things you think about money that are wrong. There are chapters in this book that I think you will find absolutely fascinating, and some of them are, what is money anyway? Can money buy happiness? I'll bet you don't know the answer to that question. The truth about credit scores, how you can actually use credit cards to rebuild your credit. I also have chapters on being your own bank, how to buy houses with an IRA, and how to invest with other people's money. There are so many other chapters. There are 22 total chapters in this book, and I promise you're going to learn how to make more money and pay less taxes when you buy this book. My name is Larry Steinhouse. The name of the book is Money Hacks. You can get this book wherever fine books are sold, and you can go to barnesandnoble.com right now and pre-order it. I hope that you will enjoy it. Welcome back to Money Chat Now. I'm your host, Larry Steinhouse. Hey, did you guys order that book yet? Come on, order the book. Order the book. Go to barnesandnoble.com right now. Order it. You'll get it in about a month. It'll be released in about a month. And also, if you want to, you can get it on Nook and Kindle right now. All right, of course, let's take a look at the futures one more time. Oh gosh. It's down 617. The S&P is down 92, and the NASDAQ is down 333. All right, we talked about shut up, Biden. He's just pissing off the oil companies, and that's what's going on. It's real simple. And we talked about the 3/4 point increase and how it's not that big of a deal. It's interesting because a couple of people online are all saying the same thing. Like Mark says, his inflation hikes are not working, which is pretty obvious. And we also have some other people saying the feds will settle for higher inflation. It means more tax collection and easier to make payments on the debt. Yeah, maybe. But the reality is that inflation is inflation. Even if you're charging more interest, it's still inflation. You still got to pay more. And then, by the way, I have to say good morning to my brother who just told me that he found out that Fauci has COVID, which I think is hysterical. I put a post about that last night. All right. Coming up, of course, we have today's picks and plays. But did you guys hit that like button? Everybody hit that like button, hit that share button, and let everyone know what great stocks are which great stock plays are coming by sharing this information. I got a couple of good tips for you guys. All right, you can share on your page or in groups that you'll feel will benefit. So everybody go and share. I want to say hello to Betsy out there. Betsy is saying hi on Facebook as well. All right. If you're listening on WWDB Radio, set one of your presets to this channel and listen every day at 7:30 for all you need to know about the politics behind the stock market. And we always have a little bit of fun here, so you definitely want to listen to it. Let's talk about what's going on. Let the ugliness begin. After I just told you that the rate increase is actually minor compared to what it should be, the stock market simply doesn't care again. The fear of recession is real, but it's more real because of the self-fulfilling prophecy it's going to become. If people keep talking about it, people will stop spending money out of fear, and that will cause the very recession that they're afraid of. Look, relax, everybody. The midterms are coming, and the country will have a red wave to solve most of the fear. With that being said, there's also many bargains today. I'm going to tell you right now, I saw some bargains this morning that I think are great. Meta is at a sweet spot at 165. This is going to be a great play into earnings, and I would buy it now or buy even the options if you want to. It'd be a great play. Twitter is also a play as Musk continues to state that he will buy the company. He's having a meeting with them today, I believe, and that will be also a great play. So I would buy it. I'd even buy it. It's right around 40. I'd buy it at 40. I'd even sell the covered calls. And I think that would be a really great play. Go out about a month on a covered call. You'll collect about 10% on your investment and wait for the stock to be taken away. AT&T is also a good buy and hold stock with a nice dividend. Buy it, sell the covered call, which, by the way, you're not going to get a whole lot of money for the covered call because it doesn't move much. But so what? You get an extra $50. Who cares? It's $50 that you didn't have, and it's free money, right? So buy it, sell the covered call, and sit back and relax. And by the way, if you saw my special on the travel stocks yesterday, you know I'm all in on them. The stocks are the better play. The stocks are a better play than the options. So I would buy the stocks because they may not move quickly. But an option going out 2 years could be a really great play. Look for the market to actually bounce back today. You ready? The market, and we're going to look at it in a second, I actually believe it's going to bounce back. That's my feeling. Why? Because there's no real bad news coming this week. The bargain hunters are going to look to buy up. As soon as the market opens, the bargain hunters are going to start to buy up, and the market will come back. It may not go positive, but I don't expect it to stay down here. All right, let's see where we are right now. Right now, the Dow is down almost 600, the S&P is down 88, and the NASDAQ is down 320. So that is where we are. Let's take a look at crypto real quick. Bitcoin is definitely going down, and it's about 21,000. Look, I've been saying this. It might go one more time to 28,000 before it drops below 20. I think it's too risky, but if you want to give it a try, make sure you get out in time. Ethereum will get attractive to me. You ready? When it hits 600. That means it needs to drop another 50% before I'd even bother with it. So wait it out. So gold and silver, the precious metals are also holding their own. I got to tell you, gold and silver haven't moved much in about a month. They're just sitting there. So this might be a good sign. It might be time to buy some. Definitely it's a good time to collect some. You know, I'm collecting it. Treasury bonds are still below 3.5. And I got to tell you, I don't believe that's going to be very long. Oil is moving down, and it's down at about 115, and the average gas prices are still slightly higher than 5.1 cents a gallon. And let's all collectively say, let's go, Brandon. Hey, I want to thank all the listeners on WWDB Radio 860 AM in Philadelphia. I want to thank you for your continued support. And if you're enjoying the show, please reach out and let us know. My name is Larry Steinhouse. I am the host of Money Chat Now, and I am the CEO of Investor Schooling. And, of course, if you guys want to contact me directly, you can go to contactlarry.com. That's contactlarry.com. And you can even make an appointment with me there if you want to talk to me briefly about anything. Contactlarry.com. All right. You guys ready? I think we're going to be able to do it. So make it a profitable day.